Hey guys, it's Steven. Today I'm going to be going over Kromatika Finance. I'm going to be going over the limit order feature that they have, and I'm going to show a strategy that you can use to accumulate Umami in a capital efficient way. So just to start, um, what's pretty interesting is their how this is powered by and what really makes this work. So the first thing is they have chain link oracles that they use, and they have these chain link keepers that will execute smart contract orders for your Uniswap liquidity pool position. So what does that mean? Like this Uniswap liquidity pool position? Well, with Uniswap, they have it's very different than traditional automated market makers and a traditional DEX decentralized exchange. You have a flat curve where when you provide liquidity, you have to provide 50% of each token, and a lot of capital is basically wasted because tokens just aren't going to get to certain price ranges, and you're providing liquidity from 0 to infinity. So with the Uniswap version 3, you have the option to concentrate your liquidity very tightly. So if you're in the 1% fee tier, your liquidity can be concentrated in 2% ranges. So just to break this down a little bit more, for some reason, Arbitrum doesn't have these very these very updated information tabs here. Like this liquidity position is not on Arbitrum yet, but this is on mainnet. But just to kind of make it a little bit more clear, currently this is the Bytes token for Neo Tokyo. You can see how the liquidity is divided and where the liquidity is and what price and how much is in there. So, how this affects, Chromatica and limit orders. Well, if you want to make a limit order, what you can do is when you place these orders, assume you want to do just the next price range lower. Maybe there's 0.56 Ethereum locked in there right now. Maybe you want to add another 0.56 to double the ETH locked in this liquidity range. So what happens is when people come and sell their tokens into your liquidity position, your Ethereum will turn into the Bytes token. And once the token is basically completely sold into your liquidity, meaning all your Ethereum is then turned into the Bytes token, the Chainlink keeper will notice that the price target has been hit, and it will take that liquidity pool position out, effectively creating a limit order. So it's pretty simple, not that complicated, but very effective way to have limit orders. And you can't do this with regular liquidity pools because you can't have these concentrated positions. So moving on, uh, it's saying that you don't pay any swap fees. Um, this is because when you go to make a swap, there's either a 0.3% trading fee or a 1% trading fee. And when you're creating a liquidity pool, there's no fees for that. The only cost to you is creating the liquidity position, the NFT, and just paying for the gas. So no fees while doing that. That's why they can say that. So overall, I feel like Chromatica is very safe, with audited smart contracts. It's not like it's super complicated. This goes and explains exactly how these decentralized services, are powered by the Chainlink keepers. So basically how this works is you will pay the Chainlink keepers in Chromatica token. And what happens is whatever the cost that the Chainlink keepers have to pay, basically the gas fee to create the position and close that position, that's what you pay, and you pay that in the Chrome token. So when I'm doing trades on Arbitrum, super low, it could be $1, $2 most, maybe even $3 if it's congested, but very cheap. So it doesn't take many Chromatica tokens, and we're going to do a a buy here today, and we'll see how much it costs. But overall, Chrome token's actually doing pretty good. They got some interesting token economics things working out here. So definitely watch out for that token and maybe accumulate a little bit if you do plan on making some of these trades. So let's just get right into the app here. So, importantly, if you want to create a limit order, you have to have Chrome. You have to buy the Chrome, but then you also have to make sure you deposit the Chrome. So, once you have the Chrome deposited into the account, then you can create your new orders, and then these tokens can be used to fill those orders. And like I said, it's very inexpensive, and you can even create a significant amount of fees back, just because what you're doing is you're creating a liquidity pool order. And if there's enough trading action within your liquidity pool, and you're earning fees off of all the transactions, it can certainly benefit you to where you can make a percentage or two more in fees, basically lowering your entry price. So let's just go ahead and get right into it. So once you have your tokens, you'll want to add the Umami token to the list here. So Umami is not on this list yet. So what you do is you go to the manage token lists, you go to tokens, and then they'll ask for the contract information here. So you'll just take that from the CoinGecko or CoinMarketCap. You can copy the contract address, and then you can paste that in here. Once this is pasted in and added, you'll be able to add this and then trade it. So another user interface thing that's kind of wonky here, when you type it out Umami, it doesn't show up. Typing just does work for me, but if that doesn't work, you don't really even have to type anything. If you did for sure add it to your token list, you can just scroll down to the use, and then it'll be here that way. So once you have this on here, you can then start to strategize, and then the question becomes, okay, so now you know that you can create limit orders, you can accumulate the token in a capital efficient way with no slippage. So now it comes down to strategizing. So to strategize, how are we going to accumulate? Where do we want to accumulate? What metrics are we going to use to accumulate? So a few things that we need to go over, and if you haven't really been paying attention over the past couple of weeks with Umami, a lot of things have happened. We had this situation where we just didn't have enough tokens in the liquidity pool. And that's just because we haven't been minting new tokens. And that's just because we don't want to dilute our community. But what we ended up doing is we ended up creating a max token supply of 1 million. We felt like this is a good max supply. And what this will allow us to do is, because we didn't have enough tokens in the liquidity pool, we were having these high slippage trading activities where it doesn't take much buying pressure to move the price, because we just didn't have that many tokens. So, the token was in low supply, high demand. So now that we were able to, through a DAO vote to increase the Umami supply to 1 million, I could then create a liquidity pool so that we could increase the supply, especially at these higher prices that we're at now. It only makes sense to increase the supply so that more buying can come in, and with less slippage, move the price. So that's basically what we've seen over the past couple days here since we've implemented this basically this high liquidity range. And You can see how this stabilizes on the Umami to Ethereum ratio here. And, overall, it's been pretty successful where we've had a significant amount of money come in and purchase Umami and, stake their Umami and get in on the yield. But now we are at the unlock phase here where people who have been holding all month now have the opportunity to sell, and that's what we're seeing here. So we're starting to see, we had some buy pressure today, and now we're starting to see some sell pressure. And um, to strategize on what to do next and what we can see happening is when you look at the liquidity pool here, you can see that we're in a very high liquidity range. So what you can do to kind of measure this, because we don't have this on Arbitrum. So it would be nice if we had this in Arbitrum, okay, there's 0.56 ETH in support here, and this is how much sell pressure it could take. We don't necessarily have that yet, right? So we don't know how much is here, but what you can do, you can go to CoinGecko or CoinMarketCap. You can go to the markets tab, and you can see here, if you go to the Umami ETH pair, you can see the depth. And this actually tells you how much is in that liquidity pool. So because each one of these tabs is a 2% range, that there is $75,000, 700 in this 2% range right here, right? So we know that we have that much support here. And then from there, I can tell you that below there, before we've increased the supply, we had about 14 to 20 1,000%. So we basically did 3 to 4x of the liquidity depth. And but the thing is now that if this these tokens that were accumulated, if this gets sold back down into, we could see that we could get back into a high slippage, basically just a volatile range here where less tokens can move the price more. Less tokens will move the price, just as much. Um, so that's kind of when you have to, strategize, like where do you want to buy? So now you can take in a few things into account. One thing that we are moving away from, but is still somewhat relevant, is the treasury value per Umami. I went ahead and estimated where that line in the sand is here. Who knows if we'll get there, but this is kind of just a good starting point to kind of look on the chart here. So if you look, it's at 0.0084 on the chart here is where the treasury value of the Umami token is. And we're basically trading at a premium because of all the amazing products that we have coming up. So looking at that on the chart here, you can see 0.008. Let's move this up here. Right here. So this is how low it would have to go to get here. So if that, that probably isn't likely to happen. So, for me, just to, make a trade here, I'm just going to assume that maybe we can get to 0.01, right? So that's what I'm going to use for this trade. I'm going to put a trade at this 0.01 here. So a few things with this. We'll just do 0.1 here. So as you can see right here, it's giving me a target price, and it's giving me a ratio of how many Umami it takes to equal 1 ETH. So it's giving me the Umami to ETH, versus when I look at the chart here, it's giving me the ETH to Umami ratio. So a little bit annoying, but not that big of a deal. What we can do is we can basically we can just kind of fiddle with this here, and what this it'll allow you to toggle this here. So if you click this, you'll get to the Umami to Ethereum ratio instead, and this will give you the price that we're looking for, which is 0.0127. So this is the lowest price that you can set this order in. It does that because you cannot, if you're in this liquidity range here, you can't create a liquidity pool order in this range because you're already in it. So the lowest price that you can do is just below that price. So that is why it's done like that. And then from there, you can, just kind of move it up and move it around until you get to your price. So as we can see here, 0.0103, let's just do it 100 for round math. So I'll do it at a price of 0.01 target. 1 Umami equals 10 ETH. I'm going to do 0.1. That'll give me 10 Umami. So, that's basically it. And once the price comes down to this 0.01 range here, if there's sell pressure and if that happens, my liquidity, my ETH will turn into Umami, and then the chain link keeper will close that position with my new Umami accumulated at a discount. So I would say this is a pretty powerful tool. You can always just come in here and create the liquidity position yourself. Um, you know, there's also kind of like an opportunity here if we do get some volatility and some unlocks here. Well, what you can do is you can come in and just provide just Ethereum support. You can create a range from 10 to 12 here. And if there's, $1 million worth of trading over the next couple of days, and you're able to get a percentage of that, it could be a pretty high APY investment if you're able to get a significant amount of these fees. So just wanted to keep that in mind there, that there is an opportunity to farm there. And I'm going to be, if we do come down here, I'm going to be interested to see how some of these liquidity pools perform, and if that does offer some incentives for other people to come in and invest and provide liquidity that way. So I think that's really all I got. Let's just go ahead and place this order here. Confirm transaction in the wallet. Cool. So yeah, I got this liquidity position ready to go, and that's it. And then it'll show up here. It'll show pending. And if it doesn't work out, you just cancel the trade. It might be spending $1 or $2 to let's see how much it costs to cancel. Let me see. Yeah, it's basically nothing. So, it's just nice. You can just do these limit orders and kind of just kind of, it's definitely a cool tool to use. And just make sure that if you are looking to trade something, that it's got to be a Uniswap version 3 liquidity pool. And yeah, so just to since I got you guys here, pretty exciting news. We did have the Umami Finance app completely redone here. So very sleek, very simple compared to before. Everything is on one page now. We don't have to worry about going to Arby's to compound our Umami. So if you want to deposit your tokens, you can deposit it here. If you want to compound them, you deposit it and then you compound. And the auto compounder will go ahead and accumulate more Umami tokens for you. So a lot of things that are coming to this as well. This is not the end. We still have the dashboard that's going to be giving all the information of how our treasury is performing and what the supply is and all that stuff. So really exciting. I'm going to finish this here, and if you have any questions, I'll be happy to answer those in the Discord. So I will catch you later.